Hello, hi, how are you? Today I would like to talk about 5 things when you are doing your home preparation of buying. It's very important that you need to understand the process of buying a home. Now, first thing I really like to stress is to find out the house you like. Find out the house you can afford. A lot of people like big mansion, but guess what? They just cannot afford. But some people search for smaller house. They try to save money. They can actually buy a bigger house, buy 3 bedroom, 2 bath, or buy 4 bedroom, 2 bath. It is a lot of decision making. So the best way to do is to find out the house that you can afford, how much you can buy. That's the number one thing I stress enough. I want to let you know. So one thing that is to buy the house that is right for you. The second thing is to save for the down payment. Now a lot of you want to buy a house, but you just don't have enough money to buy. So the best way to do is save money right now. You can plan to save $1,000 a month, $500 a month. Toward that goal, in a few years, you'll be able to save up for the down payment so that you have enough money to put down, plus the closing cost so that you can move into a house that you dreamed of. The third thing is to calculate what you can afford. Now, first of all, a lot of people don't know what they can afford. Well, let me tell you, it is for the house that you're buying. But guess what? You have also the car payment that you already have. That is one thing. And some people also have a student loan. Those are considered your debt because you're paying every month. And it's recurring every month. It's never gonna stop. So those things add up cannot be higher than 41% of what you're currently making. That consists. So the best way to find out is just to calculate. Let's say you pay $500 for your car and $400 for your student loan. That's $900. If you make a $3,000 a month, you use that 900 divided by $3,000 a month. That can find out your debt ratio. If it's not over 41%, then you will be fine. And other than that, then the second thing you want to consider is your down payment. The down payment usually is about 20 to 25% for a conventional loan. That's majority people when they buy in the house, they will use that much money to buy it. Because a conventional loan usually give you a better rate as well. Now, the percentage wise, the rate is about 3.625. That is when you have a very good credit score. But if you have a higher credit score, between 700 to 850, that score is very good. You might get a little lower. The second way to do is go with the FHA. FHA considered a first-time home buyer loan. You can only have a 5% down. 5% down is quite a good deal for you. But the thing is, you only have 5% down, you have a risk of 95% of borrowing to buy a house. Your monthly mortgage might be more. That is the one you need to take into and the consideration for you. So I would suggest you to calculate to find out which one is better for you. If you don't know, you can go to your own bank, the bank that you deposit money with, to borrow the money to find out how much you can qualify for the mortgage. And that is totally free. Or you can go to the conventional lender. There's some on the website lendingtree.com. There are hundreds of lenders compete your business. They can always find you the best rate. The most important thing is they are free. Doesn't cost you anything to find out the rate. So I would like to suggest you to go ahead, do that, to find out the best rate for yourself. The last thing, once you compare with a mortgage company, with a bank, remember they will give you a pre-qualified letter. What does that mean? That means you can have the pre-qualified letter. That will tell you on the letter, say how much you can borrow and for how much amount. And perhaps they don't have the interest rate just yet. If you want to buy the best interest rate, find out the best interest rate, you can always lock the best interest rate. Sometimes you cost little money to lock the best interest rate, but think about 30 years you are paying mortgage. This is worth it for 30 years mortgage for the best interest rate to lock that price. Plus, you don't need to pay until closing. So it is a good deal for you. Remember, buying a house is a very important decision for 30 years of your life. For a lot of family they want to move into. So we highly suggest you to find the best lender, best interest rate for yourself. If you have a higher credit score, you can definitely get one. And any question, please let me know. And if you like the video I make today, please subscribe for this to my channel. Thank you so much. We'll talk to you later.